Hey there, tech enthusiasts and savvy investors. Today, we've got an absolute whirlwind of a story. Picture this. One of the biggest names in consumer genetics, 23andMe, saw its entire board pack their bags and walk out the door. What happened? Power struggles, proposals, and a bit of boardroom drama. We're diving deep into what this means for the future of the company, and whether this chaos is an opportunity or a risk for investors like you. On this episode of Tech I Spy.
I want to talk to you about something incredibly important: your health. We all know how crucial it is to stay on top of our health, and that includes getting tested for STDs. But let's be honest, it can be awkward, time-consuming, and even a bit nerve-wracking. That's why I'm excited to introduce you to STDcheck.com, a service that makes getting tested simple, private, and fast. With over 4,500 testing centers nationwide, you can easily find a location near you, no appointment needed, and no long waits. Just walk in with your confidential test code and you're in and out in 5 minutes. What's even better, your results are ready in just 1 to 2 business days, delivered securely to your online account. And if you need to speak with a doctor, STDcheck.com offers follow-up consultations for positive results, so you can get the guidance you need without the hassle. So if you're looking for a reliable, discreet way to get tested, check out STDcheck.com using the link in the description. By using my link, you're not only taking control of your health, but also supporting this channel. Stay safe, stay informed, and take care of your health today.
23andMe stands as a leading force in the personal genomics and biotech space, harnessing its unique business model and expansive consumer base to maintain a dominant position. At the core of its success lies a diverse product portfolio, cutting-edge research capabilities, and a scalable business strategy that has carved out a niche in both consumer genetics and therapeutic drug development. They are more than a simple paternity screening service. 23andMe's flagship product, the DNA testing kit, allows users to explore their genetic makeup, providing insights into ancestry, health risks, and inherited traits. With FDA clearances for several genetic health reports, it remains one of the only companies to deliver such direct-to-consumer services. The Health Plus Ancestry service further enhances value by offering personalized health information, enabling consumers to make informed decisions about their health based on genetic predispositions. The DNA Relatives feature, which helps customers find genetically related family members, continues to be a standout, popular among users seeking more connection with their ancestry. Moreover, 23andMe has diversified into drug development. Utilizing its vast database, the company has partnered with pharmaceutical giants like GlaxoSmithKline, GSK, to develop therapies based on genetic data. This dual business model, straddling consumer products and therapeutic research, positions the company uniquely within the genomics landscape. While revenue has faced challenges due to the market environment, 23andMe remains financially robust. In fiscal year 2024, the company posted annual revenues of $219.6 million, a decrease compared to previous years, but it remains a significant player in the industry. The company continues to hold valuable assets, such as its massive genetic database, which it uses to drive both consumer insights and pharmaceutical research. With over 80% of its 14 million customers opting into research, 23andMe has built what is effectively the largest crowdsourced database of its kind. The company's foray into therapeutic development is showing positive signs. In June 2024, 23andMe announced promising early results from its Phase 2 cancer trials targeting CD200R1, signaling the potential to move beyond consumer genomics and into pharmaceutical breakthroughs. On the research front, 23andMe has leveraged its enormous database to innovate in the fields of oncology, respiratory, and cardiovascular diseases. Their recent drug trials, such as those exploring antibodies targeting, and let's get technical, ULBP6 and CD200R1, which highlight the company's cutting-edge therapeutic pipeline. Positive preliminary results from their trials provide not only potential new treatment pathways, but also validate the strength of 23andMe's approach in combining genetics with medicine. Another key strength lies in its brand. 23andMe has built strong consumer trust, positioning itself as a transparent, user-friendly service in a sector where privacy concerns loom large. Its prominence in the direct-to-consumer genetics market has made it a household name, and with more customers engaging in both ancestry and health services, it has managed to maintain consumer interest over a long period. The company's multiple FDA approvals for its health-related reports further elevate its credibility. 23andMe's strengths lie in its innovative product offerings, expansive genetic database, and growing foothold in therapeutic drug development. Despite recent financial hurdles, its market-leading position, combined with strong research initiatives and partnerships, makes it a formidable player in the biotech and health sectors. For investors, these strengths underscore the potential for long-term growth, particularly as the company expands deeper into healthcare applications. While 23andMe holds a powerful position in the personal genomics industry, the company faces significant challenges that hinder its growth and profitability. These weaknesses span financial difficulties, privacy concerns, and regulatory hurdles. But, more importantly, they may well be self-inflicted. In September 2024, all 7 independent directors of 23andMe's board resigned following disagreements with CEO Anne Wojcicki over her plan to take the company private. The board had been negotiating with Wojcicki, who holds significant voting power, about alternative offers for the company. The directors resigned after rejecting Wojcicki's proposal, citing insufficient terms that did not prioritize shareholder interests. This move also triggered regulatory challenges with NASDAQ due to the lack of independent directors. A major point of concern for 23andMe is its financial performance. The company has been grappling with shrinking revenue and deepening losses. In fiscal year 2024, 23andMe reported a sharp revenue decline of 32.67%, dropping from $299.49 million in 2023 to $199.19 million. Moreover, the company's net losses have expanded dramatically, with a $666 million loss reported in 2024. This financial strain is largely attributed to high operating expenses, particularly in research and development, which remains crucial but costly. As 23andMe pushes to innovate in its therapeutics division, these high R&D costs continue to eat into profitability, leading to increased reliance on external investments and partnerships. Another critical issue for 23andMe is the management of customer data, particularly genetic information. The company's business model involves sharing anonymized genetic data with third-party partners, which has sparked concerns among privacy advocates and customers alike. A notable incident occurred in 2023 when the company settled a $30 million lawsuit following a data breach that exposed genetic data to unauthorized parties. This kind of security lapse, combined with ongoing privacy concerns, risks undermining the trust that consumers place in 23andMe, a fundamental pillar of its business. Negative press that mentions 23andMe typically mentions data being sold to the Chinese government. Hopefully this is just paranoid conspiracy, though. While 23andMe assures customers that their data is stripped of identifiable information, some critics argue that the company does not always seek explicit consent when sharing DNA with research or pharmaceutical companies. Ethical concerns about genetic data usage continue to cast a shadow over the company's reputation, particularly in a landscape where data privacy is of growing importance to consumers. Operating in the highly regulated healthcare and biotech sectors, 23andMe has faced significant regulatory hurdles. The FDA has previously intervened, halting the company's health reports in 2013, a blow that highlighted the challenge of navigating complex regulatory frameworks. Although the company has since resumed many services with FDA approval, its reliance on these approvals makes it vulnerable to future regulatory changes. The cost and delays associated with compliance can limit its ability to introduce new products quickly and efficiently. Despite its success in consumer genomics, 23andMe remains heavily reliant on a narrow product line, genetic testing for ancestry and health traits. This limited product diversification makes it vulnerable to market fluctuations and competitive pressures. Rivals like Ancestry DNA have expanded their services to include historical records and family tree services, offering a more comprehensive package to consumers interested in genealogy. Furthermore, other companies are catching up in terms of genetic health reporting, and some, like Self-Decode, even provide more customized health recommendations than 23andMe does. In summary, while 23andMe has established a strong foothold in personal genomics, it faces substantial challenges that could hinder its long-term success. Financial struggles, privacy concerns, regulatory challenges, and limited product diversification all represent critical weaknesses. For investors, these factors highlight the risks inherent in a company still finding its footing amidst a rapidly evolving healthcare landscape.
Discover unique gifts with Martian home prints on eBay. Looking for amazing gifts that are out of this world? Visit Martian Home Prints on eBay for a fantastic selection of unique items, including our rare and stylish flag socks. Whether you're shopping for a special occasion or just want to treat yourself, we have something for everyone. Our collection is perfect for those who appreciate creativity and uniqueness. Shop now at Martian Home Prints on eBay and find the perfect gift that stands out from the rest. Don't miss out on these incredible items. Just type Martian Home Prints or click the link in the description below and explore our store today.
Despite facing challenges, 23andMe is uniquely positioned to capitalize on several significant growth opportunities. These opportunities stem from the company's strengths in personalized health solutions, its extensive genetic database, and the increasing global demand for genomics-based healthcare. One of the most promising avenues for 23andMe lies in personalized healthcare. The global healthcare industry is increasingly shifting toward preventive medicine, driven by a growing recognition that individualized health solutions can reduce chronic disease risks. 23andMe's introduction of Total Health Trademark, an advanced membership service, offers exome sequencing and blood testing, combining genetic insights with clinical-grade care. This product positions 23andMe to tap into the burgeoning market for personalized health and wellness services, with an emphasis on preventing diseases before they manifest. As the demand for precision medicine rises, 23andMe's large, recontactable genetic database can play a key role in providing insights that enable healthcare professionals to offer more tailored treatment plans. This shift toward genetics-based preventive care aligns with a broader healthcare trend emphasizing long-term wellness over reactive treatment. A significant growth opportunity for 23andMe lies in drug discovery. The company's ongoing partnership with GlaxoSmithKline, GSK, extended in 2024, highlights the growing value of its genetic database for identifying new drug targets. 23andMe has already made strides in immuno-oncology, receiving FDA clearance for a new immunotherapy drug candidate, 23ME01473, which is entering clinical trials for advanced cancers. This venture into therapeutics marks an important diversification for the company, giving it access to the lucrative pharmaceutical market. The global personalized medicine market, valued at over $225 billion, is expected to nearly double by 2027. By leveraging its data-sharing partnerships and advancing its in-house therapeutic pipeline, 23andMe stands to capture a substantial share of this expanding market. 23andMe's potential for geographic expansion, particularly in regions like Asia-Pacific, offers another significant growth opportunity. Countries like India, where diabetes and obesity rates are skyrocketing, present a fertile market for personalized nutrition and genetic testing services. The increasing consumer awareness in these regions, combined with a growing middle class, offers 23andMe an untapped customer base to expand its offerings globally. The nutrigenomics market, which combines nutritional science and genomics to offer personalized dietary solutions, presents a growing opportunity. With chronic conditions like diabetes and cardiovascular diseases on the rise, personalized nutrition based on genetic data is becoming more popular. 23andMe's expertise in genetic testing can seamlessly integrate with nutrigenomics, allowing the company to further diversify its product offerings and capture this rapidly growing segment. With its strong foundation in genetic research, 23andMe is well positioned to seize growth opportunities in personalized healthcare, therapeutics, and global market expansion. By leveraging its rich genetic database, partnerships, and a growing consumer interest in genomics-based wellness, the company can further solidify its role as a leader in the evolving healthcare landscape. These opportunities not only provide new revenue streams, but also create a broader impact in transforming health through personalized solutions. Moreover, the company's operations in different countries expose it to varying regulatory regimes. The complexity of complying with international data protection laws, particularly in light of its privacy issues, presents a long-term operational risk. Financially, 23andMe's future appears uncertain. Despite its early promise, the company has struggled to achieve profitability, and its valuation has plummeted by 98% since its peak, with its stock price falling below $1. The company's high operating costs, driven by research and development, are further exacerbated by shrinking revenue and a tightening cash flow. If 23andMe is unable to reverse these financial trends, it may run out of cash by 2025, as reported by market analysts. In addition to financial struggles, 23andMe faces fierce competition from companies like Ancestry DNA and MyHeritage, which offer similar services, often at lower prices. These competitors have more diversified product lines, which could make it harder for 23andMe to retain its market share. Moreover, newer entrants to the genetic testing market, many of which offer more personalized or comprehensive services, continue to pose a direct threat. In conclusion, 23andMe faces multiple threats that could severely impact its future growth. Data privacy issues, regulatory scrutiny, financial instability, and intense competition all present significant challenges. The company's ability to effectively address these threats will be crucial if it hopes to maintain its standing in the competitive genetic testing industry. For potential investors considering 23andMe, the company presents a unique mix of strengths and opportunities, yet it also faces significant risks that need careful consideration. On the positive side, 23andMe holds a strong position in the direct-to-consumer genomics space. Backed by a robust product lineup and the largest recontactable genetic database globally. The company is poised to benefit from the growing interest in personalized healthcare and preventive medicine, particularly with its new Total Health Service, which integrates genetic insights with clinical care. Furthermore, its ventures into drug discovery, including its collaboration with GlaxoSmithKline, demonstrate promising long-term growth potential in the pharmaceutical sector. However, significant challenges remain. Data privacy concerns are a considerable threat, especially in light of recent breaches that exposed sensitive customer information. This, coupled with regulatory scrutiny, adds a layer of uncertainty. Financially, the company is struggling with shrinking revenues and mounting losses. The stock's steep decline from its $6 billion valuation underscores the urgency of these challenges. For investors, 23andMe represents both opportunity and risk. While its foray into personalized medicine and drug development is promising, its success will hinge on the company's ability to address security vulnerabilities, manage regulatory hurdles, and achieve financial stability. Investors with a high risk tolerance and a long-term outlook may find value in the company's innovative potential. But they must remain cautious about the short-term financial and operational risks. Well, that's all we've got for today, folks. Thanks for tuning in to Tech High Speed and joining us on this roller coaster of boardroom drama at 23andMe. We hope we've sparked some insights into whether this is a turning point or a turbulent ride for investors. If you enjoyed the episode, don't forget to like, subscribe, and hit that bell so you never miss out on our next deep dive. Stay sharp, stay curious, and we'll see you next time.